Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is March 14th. This is Thursday, so it'll be the last one for the week, but don't forget to tune back in on Sunday for our portfolio update. Today we're going to take a look at Procter Gamble. I am almost positive you have some of their products in your house, apartment, cupboards, and may not even realize it, or maybe you do, but they are a behemoth of a company out of the consumer staple sector. Let's jump right in. And if you have not done so already or are new to the channel, if you could hit that thumbs up button, subscribe to the channel, hit that notification bell so you're notified whenever we put out any new content. Subscribing really does help, so hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Drop a comment down below. Let me know what products from Procter & Gamble you use. And let me know what you think of the videos. Share with anyone you think that might find value in the content. Again, that really does help out a small YouTube channel like mine with the YouTube algorithm. I really do appreciate it. And a special thank you to those who are subscribers to the channel. You guys are awesome. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level. It's also how we're going to run through these videos. That's why I set it up. It's now just bear with me here. I just want to put out a little disclaimer here. Don't just blindly copy mine or anyone else that you see on YouTube screener or investing criteria, or don't just buy a stock because I buy it. Make sure you have your own criteria. You have your own strategy. We are all different people. We're all different places in our lives, in our investing journeys. There's nothing wrong with that. I'm in my mid 40s. Some of you might be in your 20s or 30s or even later in life. I am geared more towards income, right? Because I'm wanting to live off of the dividends here relatively soon. Some of you younger people might be looking for more growth. Nothing wrong with that. Just make sure you have your own investing criteria and you stick to the plan that you've created for yourself based on your timeline. Now, just because it meets 5 of 8 or 6 of 9, it's a financial company, does not necessarily mean I am investing in it. It just means it goes onto my watch list. I do more of a deep dive. This is a screener. This is not a stock picker, right? So let's keep going here. Now back to the video, back to Procter & Gamble. If you want to know more about this company, check them out at us.pg.com. That's us.pg.com. That is their homepage where I pulled this information from. And as you can see here, a lot of brands, and this is not even close to all of the brands. This is just some of the ones that I pulled up pretty quick. If I'd have put many more on here, you wouldn't be able to really tell what they are. But you know them, right? Gillette, Bounce, Era, Febreze, Gain, Cascade, Loves, anyone who has kids, Pampers, Ninjamas, Aussie, Head & Shoulders, Herbal Essence, Old Spice, Bounty, Charmin, Puffs, Pantene. You know a lot of these brands. You probably have them in your cupboards, in your house, in your Downy, But for more than 185 years, we've challenged the norm and inspired the future, from the products we put on the shelf to the people we bring on our team. So that's what it's really about. They have a whole bunch of brands under their umbrella that they are putting out, whether it's personal grooming, laundry products, dishwashing detergents, home cleaning products, odor eliminators, hair care, a lot of different feminine products. Tampax is another one under their brand. Again, so many underneath their brand that I couldn't get them all on here without it really looking funky. So these are some of the ones that I knew people would. Gillette, hair razors, Braun, personal grooming, Gillette for women. So again, these brands, you use these brands, I'm sure. Downy soap. Let's keep rolling. Now, the reason we were taking a look at them today, down 0.46. They were not down huge, but they were down nonetheless, so I wanted to look at them. They're also in my portfolio, so I wanted to do a checkup on them. Closed out the day at $161.56. We are talking about the Procter & Gamble Company, ticker PG, out of the consumer staples sector. 52-week range as low as $141.45, as high as $162.73. So they are closer to their 52-week high than their 52-week low. I would love for more of a pullback on this one. Average volume, 6.8 million, stays with 3.9. You can see they really dropped down here at one point, kind of recouped around 930 there, and still had a bit of a sell-off. Down 0.46. For the overall market, they were not really down as much as some other companies. It looks like they're up actually in the after hours, at least as of 4/12 whenever I pulled this information. Let's keep rolling through this. Market cap of $380.156 billion, so a large cap company here. Beta of 0.43, so they are less volatile than the overall market. PE ratio, price to earnings on this one is a little elevated in my opinion, $27.06. I would be looking for more of a pullback. You'll see my position here in a little bit and why I say that. EPS, earnings per share, sitting at $5.97 per share. Earnings date coming up April 18th. Forward dividend is $3.76 with a 2.32% dividend yield. Ex-dividend date was January 18th. They paid out February 15th. And one-year target, at least according to Yahoo Finance, $169.80. So they see some slight upside as far as price appreciation on this one over the next year, but not a ton. And that's why I would want more of a pullback on this one. Now, we're going to get into statistics, look at dividend yield theory. To do that, we go to the 5-year dividend yield average at 2.44%. We compare it to its current 2.32%, or over here forward 2.32%, same number. Since it is lower, that speaks to overvaluation. Right? If this number was higher than the 5-year average, that would speak to undervaluation. These are inversely correlated. So right now, at least according to dividend yield theory, this one is slightly overvalued. Payout ratio, I like 75% or less. This is sitting at 62.57, so it meets that metric there. So they do have room to continue to grow that dividend over time. We'll see if they are here in a little bit. Now, we're going to take a look at the free cash flow. You'll find that under the financial tab if you go to Yahoo Finance, where I pulled this information from, not affiliated, just one of the sites that I go to. A lot of good information under the financials tab, right? Their balance sheet, their income statement, their debt to equity ratios. Do they have more assets over liabilities? Are they paying down debt? Is their revenue growing? Are their margins growing or shrinking? All good information you should be looking at to see if a company is fairly valued, how they're spending their money, how their revenue's doing. All that you should be looking at if you're investing into individual stocks. If you don't want to do that, stick to indexes or ETFs. VOO, the S&P 500 would be my recommendation, or VTI, that's the one I buy, which is just the whole United States stock market, and just set it and forget it and dump money into it. SHD is another ETF that I buy. There's a bunch of them out there that are good ones. VTG is another one if you want something more on the growth side. A lot of good ones out there with low expense ratios. Just make sure you're getting as low of an expense ratio as possible. Let's look at the free cash flow here, because typically if you have growing free cash flow, you have growing dividends, and that's what we want to see as dividend growth investors, or that should be what you want to see. Going back to 2020, we're at $14.3 billion. 2021, $15.5 billion. Looks like a little bit of a drop from 21 to 22 here at 13.5, but then right back to growing again in 2023, up to 13.7. Now, let's look at this here, repurchase of capital stock. They are aggressively repurchasing their own shares. You can see 7.4 million back here in 2020, 11 million, big repurchase in 2021, 2022 at 10 million, and a little bit of a drop in 2023. So actually, this drop in free cash flow really isn't accounted for in the repurchase of shares. That might be a little bit of a drop overall. Same thing with 2022. There was a drop in free cash flow, but I mean, with 10 million shares, they're pretty close to what they were buying back in 2021. This drop here is back closer to what they were doing in 2020. So long as they're repurchasing their own shares, I like it. And I would call overall from 2020 to date, you are seeing lower free cash flow. So that is something you want to keep an eye on. Now, according to stockanalysis.com, and you pick out any sources that you like. This is just another one that I like. Just make sure you're not blindly following one source, that you're looking at 2, if not 3 sources to make sure the information you're getting is accurate and up to date. Stock Analysis has 18 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $153, which would be closer to where I would be interested. That would be a 5.3% decrease. They have an average estimate of $168.89. That would be a 4.53% increase, and that's pretty close to what we saw with Yahoo Finance on the previous page. And they have a high estimate of $179, which would be a 10.79% increase. All the while, you could collect that dividend yield. Now, return on equity and return on, if you go to statistics, we're going to look at return on equity and return on invested capital. I like 10% or better for these. As you can see, return on equity on this one, 31.4%. Very high, very good numbers. Return on invested capital, same thing, 17.85%. Beats the 10% metric I'm looking for. EPS forecasted growth, I like 5% or better. They're forecasting 8.36%. Again, very good numbers. And revenue growth of 4.86% estimated over the next 5 years. Overall, very, very good numbers for this company. Really like it. It is one in my portfolio. We'll see my position in a minute. I just don't like the price it's at now. I would like a bit more of a pullback. Under 155 would be ideal. Now over to my position again. I am long Procter Gamble, ticker PG, out of the consumer staple sector. I have 33.908 shares. My cost basis is $140.16 per share. Again, I would probably be willing to buy this one under 155, under 153, somewhere in there. I am up 15.2%. So again, looking for more of a pullback on this one. I'd love to build out this position. Let's look at the dividend history. Again, payout ratio low, quarterly payer, 63.03% payout ratio. Now, this is the only thing downside, a little bit of a downside. They are growing their dividend. They're just not growing it very fast. 3% dividend growth. Still have room to increase that. Again, I like 75% or under here for the payout ratio. Would like them to tick this up a little bit. You know, it'd be nice to get to 5% dividend growth, but I get it. Big company, slow revenue growth. So long as they continue to grow that dividend over time, I'm fine. Same thing with Verizon. You know, they're only around 2%. This one's a little higher than that. So I don't mind slower growth so long as they continually plug along and do that. Going back to January 2021, they were paying 79 cents and some fractions of a penny. April 2021, they raised it up to 86, almost 87 cents. April 2022, they raised it up to 91 and some fractions of a penny. And April 2023, they raised it up to 94 cents and fractions of a penny. I would expect here in April of 2024 for them to continue similar growth right around that 3% mark. Again, I'd love it if they hit 5%, 4%, or 5%, but we'll see. This is what I'm expecting. I'm expecting another around 3% raise. That's just the type of growth that this company has, and you have to live with that. So overall, again, on this one, my cost basis of $140.16. I am not going to be waiting until it drops below my cost basis on this one, but if it was a drop in the mid 150s, 155 or lower, I think I would be adding a little bit more to this position. Well, that is it for this one, and it's it for this week for the Stock Pick of the Day series. Again, don't forget to tune back in on Sunday. Hit that notification bell so you can tune back in on Sunday and join us for the stock portfolio update. We do that every Sunday morning at 7:30 a.m. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Drop a comment down below. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Hit the notification bell. Hit the thumbs up. And I do personally read and respond to the comments. I'm always interested to read your questions and or opinions. So if you have a stock like Procter & Gamble you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down in the comment section, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice, counsel, or certified financial advisor.